All right, good day, traders. This is my attempt, my iteration of a smart money concepts course. Um, Smart money concepts, right? Where does that term come from? Um, what are we talking about, right? So, I learned to trade in 2020. Uh, I learned to trade from Lavish Ruby, and she had a Discord, and she created a syllabus and she took us on a trading uh she our trading journey, right? And it was all good. She was making all kinds of money. She would trade live. I was with her when she made like 200K in a day. In fact, I was with her twice when she did it. So I knew that it was real and she knew what she was doing. But the way she traded support and resistance did not provide me with the level of consistency that I felt that I needed to be comfortable in the market. So I had to go and find a different way to trade. Okay, so I had to deal with the problem, but I needed some other method that would give me more solid results. And the more I looked into things, on YouTube, there were a lot of these smart money traders or smart money videos being published. And the deeper I dug, I came across this guy uh, known as ICT, Inner Circle Trader. And he talks a lot, man. And many people don't like his videos because some of them are very long and he goes off on rants many times throughout the video series. However, there is no other person that I've found that is more accurate uh, and the concepts, that are very real and easy to understand than this guy. And I'm going to basically show you uh, some of the things that I've discovered throughout these last few years. Okay. If you go to his YouTube page and click playlist, there are all sorts of things. 2024 mentorship, 2023. I personally really liked the 2022 mentorship. That is the mentorship model that I currently trade and will always trade for that matter, right? Um, because that is my, uh, that's my core concept, right? I trade this mentorship model. It's a 41 video mentorship model, and he lays out everything throughout the course of the video, right? He takes a year. He starts doing these videos. Normally, he starts in March, I think, uh, and he runs throughout the year, and he gives you uh, real life examples and what to look for in the market as it plays out, right? Um, and you can take that model and you can, build your trading plan around that model, right? Now, there are several different concepts that I discovered before he came out with that 2022 mentorship model. And those concepts were all from him. So I'm showing you where I learned the concepts that I currently trade. So I'm not a scalper, but if you're a scalper, you might want to look at that mastering high probability scalping volume, right? Um, I looked at this 5 video market maker series. Um, I also looked at the WENT series, the ICT WENT series, what every new trader needs. The Forex market primer. These are basic concepts and gives you a baseline for kind of what to look for. Now, you're not going to remember all of that information. So many of those videos you might have to look for or look at more than one time. But I want to call your concept before we even get started um, on smart money concepts. we are going to take time to look at these two videos during this session. Okay. The first video is like 10 minutes, and the other video is like 35 minutes. But I want to watch these videos because I speak about these things throughout the course, right? I think these are integral to understanding how to make money. And I will call your attention to a few things as we go.
Hi, folks. Welcome back. This is going to be a very short lecture. Promise not to spend too much of your time. And it's going to be a topic I want to kind of like mine a little bit. So over the coming weeks, I'll be sending examples of things like this to the YouTube channel. So they'll be very short, probably like 10 minutes or less type videos. So that way you guys that like to use the speed up format of 2 times, because I talk really slow and long, it'll help you get to like a 5-minute video. But you've seen me do like intraday trading and like 1 minute chart trading, trading both directions of the daily range. I want to give you one little piece of that puzzle, and that way you can go into your charts and start looking for things that repeat over and over again, and you'll have that epiphany moment, I'm sure. You won't have everything, obviously, and that's not the point. The point is for you to start getting closer to these lower time frames because it'll give you a lot of examples and practice that are still transferable by logic to the higher time frames. So, for instance, the daily chart, it takes a whole day, 24 hours to make that candle. That's a lot of trades in there you can take, but you can't really practice a whole lot with that one particular candle if your time frame of trade is the daily chart. So, how do you practice and get a lot of appreciation and experience using price action concepts, using these lower time frames? But once you understand them, you can actually operate in them with highly technical precision and consistency. But you cannot be convinced of that until you go in and practice it. All right. So we are looking at the E-mini S&P. This is the delivery contract month of December. Okay. So futures, they have expiration dates. And while I'm not going to go into every facet about futures trading, you all have been exposed to that over the years with me in my teachings. But the idea is we're looking at the S&P. And prior to today's trading, we had yesterday's trading. We had a big down day. So right away, whenever we're bearish, this is something you want to have in your notes. If you're bearish, you want to be looking for up close candles. All right, up close candles. Every time we find price trading into an up close candle when it's bearish, you're likely to get some sensitivity there and a displacement lower. Now, inside of displacement on a 1 minute chart, there's lots of opportunity for trades. So you can go in there and practice with your demo account or paper trade them or just backtest the idea. But yesterday we had a big down day, so I want you to consider this candle here. So I know a lot of you are going to look at this, oh, this is hindsight stuff, whatever. Then the lesson isn't for you, is it? So we're going to have this level highlighted. And we're going to go into the intraday price action of this daily candle. And we're going to drop all the way down into a 1 minute chart. Folks, we are looking at the afternoon trend for equities, and that begins at 1 o'clock in the afternoon Eastern Time and closes at 4 o'clock. So 4 o'clock Eastern Standard Time and 1 o'clock Eastern Standard Time. That is the afternoon trend for equities. Now, if you're a stock trader, okay, say, I don't know if any of you are actually trading stocks or intraday trading stocks, you can actually focus on this time of day, or you can look at 9:30 in the morning to 11 in the morning Eastern Standard Time. That's the morning trend for equities. The same thing would apply to equity futures or index futures like NASDAQ futures, NQ, ES for E-mini S&P, and the YM for the Dow futures. So no matter what you're looking at in regards to stocks or the indices themselves, this particular time of day is a really nice opportunity to trade, especially with these lower time frame charts. And you can actually practice a lot with Like, for instance, if you work during these hours, you can come home, pull up the charts, and start studying these because even if you don't trade them, it gives you a lot of study that is focused around a specific time of day. So it's time and price, and you can look for specific signatures. Now, this red line I added relative to that daily up close candle while the market's been bearish. What you want to see is when price between the 1 o'clock and 4 o'clock in the afternoon Eastern Standard Time, when it breaks below that, not just trades below it, when it breaks like that, that is an imbalance. So right away, you want to look at the last up close candle prior to that drop down. Now, notice what I just did. I gave you context. I gave you a narrative, framework, structure, market structure. And since we're on these lower 1 minute charts, this is micro market structure. So we see an imbalance here, and then the markets want to trade right back up into that. Now I'm going to take this level off, but just know that that was the framework of what we're looking for. That's that little indication, if you will, without any indicators, that the market wants to go lower. So we can take this off and then add right on the body of that candle, right there. The open on this candle comes in at, now watch this price right here, okay? The open on this candle comes in at 32.56 even. The high on this candle comes in at 32.56 even. Now, folks, listen. I don't know what parts of the world you're from or what town in the US you're from, but that's perfect where I come from. You can't get any better than that. You can't get closer. It's just perfect. Okay? So when price trades up into that, that's a short. Go and look at the examples I put on my charts and my trades. When I show my trades and recordings on this YouTube channel, that's the level of precision that I show and what constitutes the framework for those types of trades. So we have an optimal trade entry in here. So if we add a fib to that, just to give you the idea of what we're looking for, the bodies stay inside of optimal trade entry, and the 79% tracement level caps the top. Perfect delivery. The market then breaks down. So how can we get a target? Well, you can get a target with this fib, or you can look at the overall market structure that sets the setup for the swing. Okay, so if you're an intraday swing trader, or if you want to become an intraday swing trader, this is what you're going to do. You're going to look at the parent price swing, which is here. And if you're bearish in here, aren't you expecting it to trade below this low then? Sure. So this parent price swing, we use the fib to project down. We're looking for 32.1875. Okay. Well, we're going to put a line on that. There's your market structure swing projection. And 3218.75 is your projection.
Okay, I'm going to pause it right here. We'll come right back. But I want to go to a trade setup that I called out. I called this trade setup for my boo, right? Um, let's look at EuroCAD. EURCAD. For those of you who have been with me and understand how I trade, all right, on August 5th, right, on August 5th, we had the price action that comes up and we wicked the high, right? We wicked the swing high on August 5th. This daily candle wicked the swing high. And I made a video. I told everybody in the group that this price was going to sell because we wicked past the swing high. Another one of ICT concepts that you can find on his videos. But more importantly, when we wicked the swing high, the market pushed down, then it pulled back up to give us an entry in order for us to go short. And I want to zoom in here, because you just heard ICT say from his own mouth what he was looking for. And I submit to you this candle right here, this green candle, right? This last up close before we break down and break these lows. So if we look at this last up close, right, and you see the open of this up close candle, here's the open price, guys. If you see, if you look at that open, the last up close candle before the market breaks down, his words, not my words. Price is 1.51766, or actually 1.51776. Then the market breaks down, it pulls back to give you your entry. Now I want to look at the high for this candle. The high is right here, guys. 1.51766. The precision that that ICT speaks of, um, to me, is not duplicated, you know, by other traders or other mentors. So when I tell you that this man changed my life, this is exactly what I mean. This candle was created August 5th, right? August 5th at 10 a.m. on New York session. If you understand this concept, then you knew you could have gotten an entry. You could have set a limit order with this as your entry and the top of that candle as your stop loss. And look at the precision. It comes in and fills your order on August 21st, 1300. You didn't have to do nothing but set the entry, bro. You would have caught this move. It would have tapped you in, and the price immediately, guys. Can't make this stuff up. Price tanks from that time till now, 270 pips. Now, he just told you on that video how to get the swing level if you're expecting price to go lower and you expect price to come under the swing. This is where it's coming, bro. I mean, he just showed you how to fib from this low to this high, right? And for price to come down here. He also said if you fib from this high to this low, you should get your OTE. So let's just do it. This high to this low, price comes right back up to where your 78%, which is your optimal trading entry. For those of you, that's 78 right there. For those of you who think I just make this stuff up, there is your 100 or 1000% proof that this is exactly what that man said to do. All I did was do it, and you could have been in the trade here. Now, I did not take the trade there, because I have a ton of other things to go. But again, time and price is everything. That's why I'm showing you this series on time and price, because this entry is at 1300. Most of you, right? Most of you would not be looking for an entry at 1300 for a euro or a Canadian pair. When are you going to look for your entry? You're going to look for it on the kill zone, London time kill zone. He's going to discuss those times shortly. Or you're going to look at the New York kill zone time. So I submit to you, my fellow traders, if you missed on this OTE, right? Or if you just don't trust it, the market breaks down. Boom, right? It creates this level right here, these lows. It pulls back up Asian session, right? When does it break below? When does it break below? This move happens on London at 2 a.m. to push down. Now, we should have been bearish, right? We should have been bearish. So you could have got in right here to push down. This is on Friday, guys. Friday, London ship. Push down. It pulls back up. So this is Friday in the US in the afternoon. And this is when I told my girlfriend to get in this trade. 1500 in the afternoon. When it came back to this line, I told her to sell, right? Because I saw the setup. I saw that daily wick. I saw the push down and the pullback. I told her this is a great time to enter this trade. So this is where she entered, right? Friday afternoon. For those of you who know me, y'all understand why I would say get in this trade. Now, if you look on Sunday, when the market opens on Sunday, during the Asian session kill zone, the market meanders, it hangs out, it jacks around, and as soon as London session opens, you get that nasty drop. And it's been dropping ever since. It's been dropping like it's hot. Now, I'm going to stop running my mouth about this. We're going to come back and revisit these trade setups as we discuss these smart money concepts. But I want you to see the level of precision. He's talking about this on the 1 minute chart. I'm showing you as a swing trader on the 1 hour chart because price is fractal, right? If it happens on the 1 minute, you can see it on the 1 hour. You can see it on the 1 week, the 1 month, the 2 month. Okay. So let's go back and finish the video.
Expected low, and the low in this candle comes in at 32.19. The next candle here, 32.18.75, perfect. 32.18.75, perfect. And everything else is higher. Perfect delivery, folks. Low, high. Look at my examples in this YouTube channel. They're very similar to that. Now, I would be taking profits partial below here as well. And somewhere as it broke below here, something to the effect of maybe 10 handles or something like that. But logically, you can go through intraday charts like this on a micro market structure basis and find lots of precision elements that repeat over and over again. And you can use this model here and find many things that line up perfectly. And I'll just scrub this over so you can see. That's that half of a standard deviation. And again, the swing is this one up here. If you see that break below the bearish order block, that's your indication. Optimal trade entry, perfect delivery. It needs to trade below that. Great. How far can it go? Perfect delivery at 32.1875, and bam. There you go. Hope you found this insightful. Until next time, I wish you good luck and good trading.
All right, this is part two, about a 35-minute video. Maybe we'll watch the whole thing, but we'll at least get started.
All right, folks, welcome back. We're going to continue our lecture on micro market structure and time and price concepts. And I'm going to build a little bit on your understanding of my order block theory. So if we are looking at indices or index futures specifically, as we referred to last time we were together, we're looking at the E-mini S&P December contract for 2020. And if you recall, if you have not watched the previous recording, then please stop this video and watch the other one. It's not a very long video. It helps build a little bit of the foundation, also referring back to this candle. So if we look at price action like this is a daily chart, I want you to confer with the direction. Where's it been going? Okay, so if we're going to be using micro market structure, that's like the very, very low time frame intraday charts. There are some out there that say that there's just noise on these lower time frame charts. And if you really take a step back and think about it, that's actually impossible. It's impossible, okay, for that to be true because it's the same price. So the fact that we're measuring the fluctuations on the basis of a specific time interval, that's where the confusion comes in because it becomes a question of what time frame do I use? Which is the better time frame? Is it a 1 minute chart? Is it a 2 minute chart? A 7 minute chart? 5 minute? You know, you can use any lower time frame chart you want, but if you really want to get ultra tight with your entries and stop loss orders, the 5 or 1 minute chart is the best in terms of doing that. But you have to understand what you're looking for, otherwise you will get burned. All right, so I've covered in many videos over the last 10 years dealing specifically with Forex and teaching some of my concepts with that asset class. And many of you are familiar with my time and price theory. I've done videos on that and tutorials, and it's made its way in many of my lectures. And you all understand and have been introduced to my ICT order block theory. So while I mentioned this specific candle last time as a bearish order block and how we can use the low of that candle, and again, I'm going to count you to look at this price up here. So the price comes in at 32.56 and a half. Okay, so 32.56 and a half. We can use that level when we're bearish. So the market has been going lower, and to avoid all of the necessities of trying to pick a bottom in a bear market, you just simply focus on the up close candles. If we get an up close candle while order flow is down, or trend or momentum, however you want to refer to it, but this is how the interbank traders will focus in on key price levels on the lower time frame for entry. Now you're also going to hear hedge fund managers, bank traders don't use 1 minute charts. Well, that's true in a sense, but they're waiting for something specific on the chart to appear to initiate their engagement. So I'm going to teach a little bit of that, and I introduced it in the last video, but I want to build on a little bit here and still try to keep the video short. So we have this level here, and we're going to look at Friday's price action. Now notice Friday's price action is a nice bullish candle. Now it didn't have a whole lot of range, but it was respectable, and it did trade deeper into this up close candle. It does not matter, because if we're trading micro market structure, what we're essentially doing is we're trading the intraday volatility, both directions, up and down. But how can you determine which side of the marketplace has the more likely probability using order block theory? Well, let's go back down into a lower time frame. Okay, so here we have the E-mini S&P December contract for 2020, and we are dialed in on a 5 minute chart. Now I want you to take a look at this price action, pause the video, study it for a little while, and come up with what you think you see in this price action. And then when you're ready, unpause the video and I'll continue the lecture with you. All right. So as you can see, price has been meandering around in here, consolidating. And it finally made its way lower. And then it had another drop here, a little bit of a retracement in here, and price had a nice sell-off, trading down below the 32.08 level. If we break this down and add that same daily key level, that's that 32.56 and a half, and then we incorporate the aspects of time, because price by itself doesn't mean anything. It's not price and time, it's time and price. That's how the algorithm operates. It may sound like arguing semantics, but it's absolutely crucial that you understand that time is the first factor in how price is delivered. Once you have a specific window of time when the algorithm will operate and run on its macro, and again, a macro is a short list of processes that go in action for either running to a specific pool of liquidity or to a period of time where the market was inefficiently delivered and therefore rebalancing. They're the only two things that occur in price. It runs to liquidity, either buy side liquidity above old highs, or it runs sell side liquidity below old lows, or it runs to an area of inefficiency in the sense that it wants to rebalance. So, with those two ideas in mind, I want you to remember that we were looking at the EMA/SP on the daily chart. I've already suggested that we should focus on delivery on the downside, so attacking sell side delivery. So you have to look for where does sell side liquidity reside. Well, if you're looking at London open kill zone on Friday, and that begins at 2 o'clock in the morning and ends at 5 o'clock in the morning. Okay, so once we have that period on our chart, we're hunting in this area for a specific phenomenon. Now, that phenomenon is what I talked about in the last video, where we have an order block, which you can see the price trades up to it here, here, that red line is what I'm referring to, here, 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 here. What's going on there? Is that resistance, or is that an algorithm holding price at this level? They're accumulating short positions. So now, if we are looking at this area up here and they're shorting, and again, they collectively are the real smart money, not Goldman Sachs, not Citi, but they're a lower rung entity in this grand scheme of things. Okay, so if we look at that area right here, the order block in itself, if we're using higher time frame, you have to wait for price to show its hand. What does that mean? Does it mean get right in at the order block? Not if it's a higher time frame order block, no. So you wait for time of day. Now we're in a kill zone, London. Wait for price to show willingness to go away, in this case lower, because order flow in the daily chart is bearish. So we're waiting for a displacement lower during 2 o'clock to 5 o'clock in the morning. Do you see it? Right here. This displacement right here. Now, right away, some of you that are familiar with my content would say, okay, you have to look at the up close candle or candles that are consecutive, like this one here, like 1, 2, 3. That would be your order block, your bearish order block. If it trades back up to it, once it trades below it, well, it does it here. And then do we get a little displacement? Yes, it starts to run. This one has already been used. So as we start to retrace higher, right in here, that candle is what you would be using for your order block. So you have this price run here, and then this order block. What's the low on that candle? You're going to look at this price right here, okay? Focus there. The low on that candle comes in at 32.43 even, okay? 32.43.00. The high on this candle comes in exactly at 32.43.00. Again, folks, perfect. It's perfect. It's not close. It almost made it. It's perfect.
Perfect.
It can only happen that way if these markets are running on an algorithm. What time of day would this pattern form if it's running on a program? Well, a very specific element of time. That's why I teach the London Open Kill Zone, the New York Open Kill Zone, the London Closed Kill Zone, and the New York Closed Kill Zone, and Asia. That's how many opportunities exist every single day. You don't need to be a London open trader. If you can't be up overnight and you live in the States, then trade New York or trade London close or New York close or Asia. But you don't need to be in London. But now, if you want to be a London trader and you can use micro market structure concepts as I'm teaching in this series here, you want to be looking for a displacement lower, moving away from a higher time frame order block. We've already seen the inability for the price to get above that level, that red level. That's the order block on the daily chart. Price moves away. We have an order block. We trade up into it, and we have a very clear, obvious old low, which is sell side liquidity. So now what we're saying in essence is that we're looking for this area here to be matched up with this area here. So smart money operates under what I teach is market efficiency paradigm. That means when you look at the marketplace, when you as a retail trader look at price, you're looking at patterns, you're looking at indicators, you're looking for entry, and not so much on a stop loss because most retail traders don't want to use a stop loss.
All the wrong
They
stuff.
think
You're looking at
if
all
it
the wrong
stops
stuff.
me out, I'm wrong. Well, you need to have a shield. You can't just go in there with swinging a sword. You need to have a defense mechanism, and that is a stop loss. And that is what real professionals use. They don't trade with a mental stop and or disregard it entirely. You have to measure and assume risk if you're trading in these markets. So it's good to train yourself to believe that what you're doing is the right thing to do, despite what many other people on the internet might tell you. So we have smart money selling short here. We're not looking at patterns. We're not looking at resistance support. We're not looking at supply and demand. We're not looking at Elliott Wave. We're not looking at any of that stuff. Okay. We're looking at the paradigm between where smart money would enter and where would smart money look to exit. You may not subscribe to the quote unquote they or smart money, but just for the sake of discussion, let's assume that they do exist. I believe they do, but let's assume that you don't believe it. But
You don't believe it?
just miss all that for a second. If they existed and they're selling short up here, okay, they're selling as people are chasing this higher. Every time it makes a little bit of headway above that red line, buyers are using it as a breakout. They're buying, buying, buying. Who is giving them the other side of their buy? Their long trade. Smart money is selling that to them. So if
Selling
the
you a
smart
dream.
money is short, where's the ideal scenario for smart money to get out? A pattern, a harmonic pattern, an Elliott wave, a supply and demand zone, or the obvious counterparty to what they use to enter the position. If they are selling to buyers up here, they are going to look to pair their order for exiting that short with existing sellers. That's what's residing below here. Sell stops. So what they're going to do is they're going to sell short here and look to buy it back from willing sellers at a lower price that are just waiting to be tagged. So the market efficiency paradigm is this: smart money sells, then buys it back from retail traders that have sell stops resting below old lows. Everything is upside down, folks. Everything that you think about the marketplace, everything you think about technical analysis, it's inverted. And you have to reverse that school of thought, and then everything will start falling into place. But as long as you struggle to defend your retail logic against people like me, you're going to break, and I'm going to be a frustration to you versus a help, because that's why I'm doing this. I'm not here to say, look how foolish all of you are, because I used to subscribe to this stuff too. I want you to test it. Look at it like this, and I promise you, if you spend 1 month looking at charts like that, all the retail stuff starts to feel
Dumb.
foolish to consider.
Mm.
And then when
Mm.
you start looking at how the real professionals look at price action, everything makes more sense. It's not just simply, oh, it's a stop hunt. Oh, it's a support broken term resistance. No, there's a narrative that's going on.
Mm.
And it's operating on a very specific element. I told you this level in the previous video. It was in your awareness. So we're not predicting a down close day. We're focusing on micro market structure. I get thousands of emails asking all the time, how was I doing those trades, buying and selling and buying and selling in the same day? Well, a lot of it has to do with things I'm not going to teach, but I will share some things and give you part of a view where some of the setups were framed on things like I'm showing you here, but not all of them though. So, and I think it's reasonable. Everyone out there should really accept the fact that if someone knows something and it's extremely technical and it's highly sought after, you're not going to teach everything. Okay. You're going to keep something for yourself and for your family. And I don't believe that's selfish because I have spent 10 years teaching Forex for free. And while I do have a mentorship, I'm still here doing this for free. Okay. So again, take the value that I'm giving you, and you don't have to like me, but just look at it. I'm challenging you to look at your charts a little bit differently, and I promise you, you will improve. I promise you, you will improve. Like it's a night and day difference once you see it. But what are we looking for specifically? We want to see the price move away, but not just drift away. We want to see it drive hard away because what the indicators are telling you is something altogether different. Whereas if we're reading price, price is indicating, okay, yeah, we're reaching for something. And what we're reaching for is the liquidity resting below this low. Remember, the daily chart order flow is bearish. So I want to be looking at key levels and selling short with intraday volatility at a time of day when I know the algorithm will start really operating and running on its own macro. That means it's going to be reaching for a predetermined level that we can clearly see if we understand the market efficiency paradigm. That means we look at price how smart money looks at price. We don't look at patterns. We look on the basis of liquidity, imbalance, rebalance. That's it. That's it. There's either buy side liquidity run, sell side liquidity run, or inefficient run rebalanced, or run to make inefficient. That's the only things you need to understand about price.
All right, I'm gonna stop it right there because I gotta save some for you to come watch this video on your own, bro. All I'm saying is what I'm showing you is what I've always said. And for those of you who are watching this, you probably are new to smart money concepts. But let this whet your palate, right? Let this give you reason to explore further because the level of accuracy that comes with smart money concepts, it's not it's not touched by other trading methods. So that is why I ended up in this smart money camp. I'm not saying you can't be profitable trading other styles. I believe that once you have your personal style, then you can be successful um, as long as you are disciplined, right? So discipline is going to rule the day. I'm just going to point out the things that you need to be cognizant of, the things that you need to pay attention to that will allow you to access higher probability trades along your journey. Doesn't mean that you're going to always enter correctly. It doesn't mean that we win every trade. I called a loser this week. Um, it just means that over the course of time, you are going to win a lot more than you lose. And with that being said, uh, that is the end of the first video. I wish you guys well in the markets, and I'll see you on the next video.